Stocks continue to swing between gains and losses as IT stocks drag, but the real economy plays. The energy, utility and consumer durables along with metal names are offsetting the impact. In fact, the advances are far outstripping the declines, keeping the positive sentiment intact.
Anthropic's latest plugins for Claude Cowork that automate data analysis trigger a slide in IT stocks as disruption fears resurface. Analysts see lesser impact for Indian IT services but suggest some derating.
Fractal Analytics is eyeing a scaled-back valuation of nearly 15,000 crore rupees for its IPO. This comes after it trimmed the IPO size by over 40% compared to initial expectations of a rush for India's first AI company offer temper.
Gold posts its biggest single-day gain since 2008, climbing 6% overnight and rushing past the $5,000 mark. Rising US-Iran tensions and continuing demand for the physical metal, including from central banks, aids the rebound.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormuz. I mean, the markets today, Nifty and Sensex, now in the red, and the broader market's doing better than them, which hasn't happened in a bit.
That hasn't happened in a bit, indeed. And it's been that kind of a session, right? You know, compared to what we saw yesterday, the optimist would say we were up 600. The pessimist would say we were down 600 from the highs. You can say it both ways. But for now, it's a proper tug of war that's happening between the bulls and the bears as we speak, and the bears are led wholeheartedly by the IT stocks. They have plummeted in today's trading session. Large cap IT, mid cap IT, there is no space to hide whatsoever. 7% lower now on the IT index and led by all the index heavyweights. Infosys is now down 8.5% as we speak. The losses continue to mount. TCS is now down 7%. It has slipped below the mark of 3,000. The market cap has now slipped below the 11 lakh crore mark. Wipro is down 4.5%. Tech Mahindra, HCLTech, Persistent Systems, Coforge, you name an IT stock, and it is down anywhere between 4% to 10%. That is the kind of rout that you have seen across the IT space. But offsetting IT are the banks and the other names that are doing well for themselves, Arundhati. So it's a proper tug of war.
Absolutely. And, you know, as you pointed out, if you look at that sectoral performance, you can't not talk about that IT pack, right? It's seeing big cuts after Anthropic's new AI tool sort of spooked those IT names. Infosys, Coforge, LTI, Mindtree, all of them falling nearly 8%. Every IT stock, as Hormuz pointed out, on the index is in the red. However, gains across other sectors are offsetting the losses that we're seeing in this IT pack. We've got oil and gas names doing well, Oil India, ONGC, IOC, all of them gaining between 2 and 4%. The metal pack continues its up move, NMDC, Vedanta and Zinc, all of them seeing gains as well, 2% to 3% higher. Auto stocks also doing well, Bharat Forge, Maruti Suzuki, Hero MotoCorp, all of them between 1 and 2% in the green. But the key talking point after the India-US deal was announced yesterday, Parikshit Luthra joins us now with more on the agreement between India and the United States. Parikshit, what are sort of the next steps after this announcement?
Well, a lot has been spoken about the $500 billion commitment to buy more American products. Sources now tell us that India now intends to buy more of American products which we need for our energy and economic security. And this is not immediately. This is an intention to buy American products over a 5-year period. What will this include? This includes US oil and LNG, purchase of which is already 70% up year on year, aeroplanes, aircraft components, precious metals, diamonds, technology products, high-tech chips, products used for data centers, and all of this will be purchased in a staggered manner. And this is India's intention to do so. So that was one important point. Secondly, how do you frame what has happened so far? Officials in the government calling this the first phase of the bilateral trade agreement. Now, this is in goods only. A joint statement will have to be finalized by India and the United States, and then this will be followed by a signing. What is important to note that our labor-intensive exports, which had been impacted very heavily, especially textiles, leather, footwear, that now gets a comparative advantage over countries like Indonesia, Vietnam and China. So sources tell us that $30 billion worth of Indian exports, which includes bulk of your labor-intensive exports, will now be subject to 18% tariffs instead of 50% earlier. We also see that there will be no change in tariffs under Section 232, which the US imposes under national security grounds. So this includes auto and steel. So whatever tariffs were there under Section 232, they continue as it is. As far as exemptions go, there were close to $44 billion worth of products which are not subject to reciprocal tariffs earlier. And this includes pharma, mobile phones, minerals, natural resources, and those will remain exempted. A lot of moving parts in this deal. Some of the negotiations are still taking place, but the in-principle agreement has been reached. The finalization of the joint statement will be crucial, and that will be followed by the signing of the deal. And then, of course, there will be a negotiation on services and the full-fledged BTA. All of that is going to take a long time, but the first step has been agreed upon.
Parikshit, thank you for that update there. Now, US Trade Representative Jameson Greer spoke exclusively to CNBC on the trade deal with India. Take a look at that conversation.
The time has come, and now we have the deal. We'll finish papering it, but we know the specifics, we know the details. It's a very exciting opportunity. On the one hand, we'll continue to maintain some level of tariff against India, 18%, because we have this giant trade deficit with them. But they've also agreed to reduce their tariffs for us on a variety of agricultural products, manufactured goods, chemicals, medical devices, etc. It's an exciting opportunity for both countries. And starting at the end of last year, the Indians started winding down their purchase of Russian oil. We've been monitoring that. They've been diversifying purchases of energy from the U.S., not just oil, but also gas, propane, other things. That's been going up. We'll keep monitoring that.
Meanwhile, India's Commerce Minister Piyush Goyal says that agri and dairy products are protected under the trade deal with the US. Take a look.
एग्रीकल्चर और डेयरी इन दोनों सेक्टर्स को संभाला है, उनके हितों को संभाला है और इस क्षेत्र में लोगों को उज्जवल भविष्य मिले और मौके मिले, आमदनी बढ़े, उसके लिए लगातार काम किया है। यूएस ट्रेड डील में भी भारत के जो सेंसिटिव सेक्टर्स हैं, एग्रीकल्चर को लेके, डेयरी को लेके, उनको संरक्षित किया गया है।
Now, SEBI Chairman Tuhinkant Pandey has reacted on the issue of the STT hike in the union budget. Listen to what he had to say.
लिक्विडिटी इम्प्रूव करना हमारे जो मार्केट में, कैश मार्केट में, वो बहुत इम्पोर्टेंट ऑब्जेक्टिव है हमारे लिए, क्योंकि उससे बहुत सारी जो लिक्विडिटी की इश्यूज, लिक्विडिटी टर्नओवर बढ़ने से मार्केट की जो स्ट्रक्चर है वो इम्प्रूव होती है। कि जहां आप एसटीटी की बात कर रहे हैं, उसमें भी थोड़ा सा ज़्यादा डिफरेंशियल भी क्रिएट हुआ है बिटवीन द कैश मार्केट एंड द डेरिवेटिव्स मार्केट।
On that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned. Shares of Indian IT companies fell after AI startup Anthropic released a productivity tool. The IT index has fallen over 6%, and all of those stocks seeing big cuts. Rima is here with all of those details. Rima, what's spooking these IT stocks?
Well, the fear is of disintermediation. Just to take a step back and understand what happened. So Anthropic has released a Claude co-work agent. It's agentic AI, and they've done it for 11 segments. One of them is legal. And basically, this is not sold as a separate standalone AI tool. It's built directly into the platform enterprises already. It's built into the platforms that enterprises already use today. So the fear is of disintermediation. Now, there are many companies which sit between an LLM and an enterprise. They use the power, the infrastructure, the ability of the LLM to understand the enterprise's workflows, the data, the unstructured, structured data, and come up with analytics. right? There are companies which do that. So Claude AI, the agentic AI, has done it for 11 sectors. And one of them, the legal one, has actually, spooked a lot of them because it can go through compliance, it can do documentation reviews, it can come out with legal briefs. So the fear is that what if, going forward, you don't need that, that integration service provider, that intermediary. And even if you don't replace the intermediary, the fear is that can it cause deflationary pressure, pressurize the revenue pool. And even listed IT companies do earn certain amount by implementing customization, integration, and maintaining enterprise software. So yesterday, there was a sell-off across the board. Companies which provide software tools to legal companies, there are data analytics companies which sold off, even SaaS companies like ServiceNow, Salesforce sold off. Here in India, you are seeing a brutal sell-off, and it comes at a time when the sentiment surrounding the technology space has also been very weak. IT companies have gone through a period of deflation, and now the fear is that there will be increased deflation. But is the sell-off overdone? What is the other side of the story? Listen in to the opinion Shireen got when she spoke to IT majors surrounding the impact of AI on their operating business model when she chatted with them at Davos.
How much of this new AI opportunity is likely to cannibalize on the existing maintenance revenue?
So where we've built some estimates which show there is some compression of revenue in different services because many of the AI agents improve productivity. But equally, we see a larger pool which is growth opportunities. And we will showcase that to show that net we see much more growth than compression.
I also want to understand from you how your contracts and your billing is being reworked in light of the fact that you're now doing AI work as part of it. So there's agents and so on and so forth. I mean, how are contracts, is pricing being changed on account of the AI influence and the AI adoption?
It's very early, but my sense is it will change. So first, as you know very well, a lot of things were moving to outcome-based. So agents will support that. And as we go through time, my sense is there'll be a mix because we work on what we call pods. Pods have engineers in them. We will also have some part of it with software agents. So the pricing will evolve, but today not a lot has changed, much more outcome-based.
Okay, so what could that potentially mean as you look at repricing in this era that you intend to transition into?
Not very clear yet, meaning there is a lot more value that these agents and the joint work will deliver. But as always, at least what we've seen in the past, part of that value shared with the client and part then comes to Infosys.
So in terms of margin impact is what I'm trying to understand what it would mean.
So the margin, first, we've had a very strong margin program over the last year and a half. So we are very clear that our margin will remain at the guidance we are at right now. We don't see anything which will become negative on that.
What should the next chapter in our AI journey as a country look like?
See, if you look at from what the traditional lens, most of the Indian companies are good at, the traditional services companies. I agree with what the minister said, he talked about the 5-layer approach and what in TCS we call it the infrastructure to intelligence. There are multiple layers from infrastructure. There is a model layer, there is application or the agent building layer and the experience layer on top. And while many of the IT companies in India have not built their own models, but we should not lose fact that the value actually comes in understanding the business context of our customers, ensuring the data for the customer data works for them. And I think that's our core capability. And most of us are focused on that, and you'd see us delivering value from that.
So there's going to be no change. You're not going to go the LLM way.
I'm not saying there won't be change, but don't underestimate what we are doing. We somehow seem to underestimate or brush aside saying, you guys are not doing models, so your legacy. No. What we actually do is making a real for our customers. Model is one component, but making the models work and work for the customers is the most important. That's where the value is.
Finserv's numbers at the bottom of your screens. Profitability absolutely flat. from last year. The revenues have grown by 24%. And we'll get you more details on this as the show goes by. The stock, though, has taken a bit of a dive from the highs, not as much, but still 0.7% lower as we speak. We'll get more details in just a bit. But reacting to recent reports of NVIDIA's brewing tensions with OpenAI, CEO Jensen Huang has told CNBC that the chipmaker's plans to invest in OpenAI remains on track. He said that there is no controversy and emphasized that the company's continued support for OpenAI remains.
No, there's no controversy at all. It's complete nonsense. We love working with OpenAI. We are incredibly honored and delighted to be able to invest in their next round. And so we're privileged that they're inviting us to invest for each one of their rounds. We would love to be invited, and we would consider, of course, investing in it. This is one of the most consequential technology companies in history. And this will by far be one of the most exciting investments. And I'm delighted to be invited, and we'll consider every single one. We are going to invest in their next round. We're looking forward to Sam closing it, and he's doing terrifically. And we will invest in the next round. There's no question about that.
On that note, it's time for us to slip into a short break. But here's a quick sneak peek into the stocks we will be addressing on your stocks today. Don't forget to catch fundamental and technical experts give their views on these at 2 p.m. today, only on CNBC TV18.
Welcome back. The 4-day partial U.S. government shutdown has ended with Donald Trump signing the $1.2 trillion funding bill after it was passed by the House of Representatives, which are narrow majority. The bill contains spending measures for Homeland Security, Pentagon, State and other departments. The next report tells you more.
But I'm thrilled to sign the Consolidated Appropriations Act.
U.S. President Donald Trump signed a spending deal into law on Tuesday, ending a partial government shutdown that went into effect on Saturday. The deal gives lawmakers time to negotiate potential limits on Trump's immigration crackdown, while restoring lapsed funding for defense, healthcare, and other agencies.
And it continues funding for the Department of Homeland Security until later in the year.
Trump negotiated the spending deal with Senate Democrats, who are demanding new restraints on his aggressive immigration enforcement tactics, following the killing of 2 U.S. citizens by federal agents in Minneapolis last month. The deal passed the Senate by a wide bipartisan margin last week, and on Tuesday it narrowly passed the House of Representatives.
On this vote, the yeas are 217 and nays are 214.
Here's Democrat Steny Hoyer from the House floor.
Minneapolis has shocked the conscience of America. The Congress needs to rein in the Department of Homeland Security.
Republican House Speaker Mike Johnson said states led by Democratic leaders need to work more with federal law enforcement.
We make the plea and the demand that the governors and the mayors in these blue states and blue cities participate with federal law enforcement so that we have a safer environment in which to implement and to enforce federal immigration laws.
But Elaine Camark, senior fellow at the Brookings Institution, said Republican support for ICE could backfire during November's midterm elections.
Who knows if it'll be a live issue in October or November? If they pull back ICE and pull back this sort of radical deportation plan, by the time we get to October or November, it may not be an issue anymore, and I think that that's what they're realizing.
The Trump administration said it was already deploying body cameras on immigration agents in Minnesota, which is one of the Democrats' demands. But other Democratic proposals will face more resistance as negotiations between the two parties continue.
And with that, it is a wrap on this edition of Business Lunch from Hormaz and me. Goodbye and many thanks for watching. Midcap Radar takes all the action forward.